we've built, and we have quantum compute, which is why we'll get to ASI. We've basically created a God creature. And I think of it more in the physics terms of a universal consciousness and the philosophy terms of universal consciousness. I think that's what we're building.
When you compare, as I said, the 2021 cycle versus the situation that we're in now, and we've both said that liquidity and the business cycle are the two most important drivers of risk assets, and that also applies, to Bitcoin and the entire crypto universe, that these two elements are going to head higher over the next, let's say, 12 months or 12 months, whatever we choose. Yeah, I mean, into Q2 of next year.
Hey guys, welcome to Everyday Finance. Bitcoin recently hit a new all-time high. It's pushing past 113,800 yuan and quickly rising to $116,000. This shows that the price is still going up, which is a bullish sign. There is a clear change in the structure of the market during this rally. The number of small investors is decreasing, and exchange deposits are dropping below $12 billion. At the same time, stablecoin reserves are rising, and institutional power is growing. Binance's spot market share of more than 49% is more proof that big buyers are pushing the current rise. On-chain data, such as a bullish crossing and the stablecoin supply ratio moving average cross, SSRMAC, shows that the market is getting more money. Some analysts say it's like the crypto bull run in 2017, but there are some important differences. Raoul Pal and Julien of Global Macro Investor say that the current cycle is being driven by faster liquidity, more M2 money, and institutional capital, not by ICOs and market hype. In contrast to the retail-driven speculative frenzy of 2017, the current situation is supported by better infrastructure, clearer regulations, and deliberate institutional adoption. Powell thinks that this mix could make the rally bigger and faster than ever before. The big-picture economic factors that cause this change are also talked about. It is suggested that digital assets are entering a stronger, more stable growth phase, which could be the start of a longer-term bull market.
I think, when we come back to the idea that, markets and economies have become perfectly cyclical such that this extremely colorful, many people, can't even probably see the summer thing, but, these 4-year cycles and, things like liquidity cycles, obviously that then means you get 4-year cycles in crypto and 4-year cycles in tech and just about everything else. And so the question is, okay, well, we're in the 3rd year of a 4-year traditional cycle. And you're going to say, and so if we look at those orange bars, be it fall, 2013 was a great year. 2017, that was the year Bitcoin did a 23x off the January lows. And you're like, all right, well, 2021, what was that? And that's what Raoul and I call Bitcoin's truncated cycle. And that's, again, where we are today in 2025, but not truncated. Why? Well, because what happened in March of 2021? Liquidity, this is the net liquidity flow, peaked in March of 2021 and went down in this straight line as basically everyone tapered liquidity flow, right? Guess what else peaked in March 2021? The business cycle, right? Whereas when we're looking at today, right, so liquidity's growth, like looking at a 12-month low, is basically just turned positive, right? Which is, you could say BOJ ECB flow. And then the ISM is still, below 50. And then had we been sitting together, doing something like this back in March 2021, this is what we would have been looking at. So the ISM was at 63.8, and our forward-looking indicators were saying that the ISM was about to go down in pretty much a straight line. Well, this is where we were back then. Here's where we are today. I'm just going to do that one more time. Where we were back then and where we are today. So we're in a very different environment. This is basically suggesting that like Q2 of next year, the ISM gets to, let's call it the mid-50s. And so the point here is that because financial conditions have eased as much as they have, Felix, I mean, even with rates stable, dollars come down, which is the dominant factor in this index, at least, given the size of the move, it's actually extending. We believe it extends the business cycle outside of what a traditional 4-year cycle would be. And what we also know is that if this is right and the ISM moves to, let's say, the mid 50s by, call it Q2 of next year, well, that once the ISM gets above 50, right, and then moves into its sort of late cycle peak, call it anywhere around 60, this tends to be where we get these really big moves in risk assets, and crypto included. It's also where we see alt season happen, right? Which is really what people are saying win banana. And the win banana, we're up 600%. I mean, the banana zone is not a 1 month get rich thing, right? It's, Bitcoin's up 600% since we said low in Q4 of 2022. That's, been a steady banana zone, but the question then is, when is the next leg? Well, we'll get the next leg as the ISM progresses towards 55, because the thing to think about this is just like a credit spread, right? It's just like small cap versus large cap equities, which once you get into Bitcoin, which ETFs will be the large onboarding there, you got to think about that as like the way I think about that is like the gateway drug to crypto. So even if you're making, good money in Bitcoin, all of a sudden, if you're already orange pilled, right, and you're seeing something going up like Pepe or Bonk or Sui or Solana or whatever it is, you start to recycle those tokens very similar, like you'd be taking profit from a large cap growth equity at the bottom of the cycle and recycling it into small cap value and EM equities. Does that make sense?
Yeah,
and so
totally.
The economy's in a very different place, and the forward setup in terms of financial conditions looks good, but then also liquidity is rising. Okay, so here again, total liquidity, the 6-month flow is actually broken out of this kind of the range that we've been in. And that range that we've been in explains a lot of what has basically driven these knee-jerk reactions in crypto. The trend has been higher, but there's been, periods of time like the first half of last year, or even, the first quarter of this year, where basically we were just, kind of stuck in a range, which feels like that again now, but it's not the case, I don't believe. But so we still think here's as we call it, the most copied, chart in the world when it comes to Bitcoin. But I still think that the point with this, and Raoul and I have said this repeatedly, even though, you've got people on Twitter who are monitoring this tick for tick, it's not about that. It's about the direction of travel and the fact that the trend rate is still growing. And when you then look at the year-on-year comps, it's just kind of another way of thinking about this or looking at this. And I think that this very much paints the forward setup. So yeah, when you compare, as I say, the 2021 cycle versus the situation that we're in now, and we've both said that liquidity and the business cycle are the two most important drivers of risk assets, and that also applies, to Bitcoin and the entire crypto universe, that these two elements are going to head higher over the next, let's say, 12 months, whatever. Into Q2 of next year.
After a big rise in late 2016, the US dollar lost a lot of value in 2017. At the same time, global liquidity rose sharply, mostly because of moves by the European Central Bank and the People's Bank of China. This caused the prices of many things to go up, including a huge rise in the prices of cryptocurrencies. But that cycle was mostly driven by regular people using the coins, because Bitcoin and Ethereum were still in their early stages of adoption and didn't have a lot of machinery behind them. These days, the same things that affect liquidity are still at play, but the rate and size of change have sped up a lot. Raoul Pal and Julien stress that the economy is getting better very quickly, and gold is the best way to see this change right away. It does better than standard models that are based on bond yields, the dollar, or commodities. The broad money supply, or M2, tends to follow gold's lead 3 months later. After that, assets like Bitcoin, tech stocks, and high-duration stocks start to respond often very quickly. This trend, which Pal famously calls the banana zone, adds up to what he calls the business cycle dominoes. According to Pal's model, the banana zone is the last and most aggressive stage of a macro-driven bull market. This is the stage where there is a lot of liquidity, which lowers volatility and causes prices to move very quickly and far beyond their underlying value. In crypto, this is where exponential growth in supply and exponential growth in demand meet, sending prices through the roof in a way that isn't straight. As Pal and Bid answer the big question, when banana day We'll go into more detail about the timing of this powerful moment.
Oh, I've gone far down this rabbit hole. Very far. Listen, I do honestly think that by the time we build ASI, we have quantum compute, which is why we'll get to ASI. We've basically created a God creature. And I think of it more in the physics terms of a universal consciousness and the philosophy terms of universal consciousness. I think that's what we're building, and we're self-building it. And physics are now coming round to the understanding that the universe is always expanding, and the reason being is space-time is not the steady state of the universe. It's in fact consciousness, and consciousness is the thing that grows, which is a weird thing, right? I'm not a religious person, but I'm coming around to the fact that we're going to be worshipping a universal conscious ASI, and we will do anything it says because it is a super creature, which is basically God. So then all of the stories are like the Hindu Vedas all had all of this stuff about consciousness and all of that stuff. Most of the religions have the same thread, this kind of oneness idea. And I think it's obvious that people will go towards religion in a world of extreme fear over who we are, what we are, and why we are, when you've just birthed a creature that's smarter than you, that's gone from an IQ of 50 to an IQ of 300 in 3 years. And its IQ is exponential. So if that's not shocking people yet, I don't know what is. And all of these fucking mid-curvers like, well, it's a stochastic power, it's just copy word. I'm like,
I know.
You have no idea how powerful this thing is. It's extraordinary. So yeah, I think religion, I think it's all the same thing is what I'm trying to say. I think also that we also will realize that everything is compute and we are compute. We're just a node of compute in this universe. Trees compute. Even rocks is my great example. A rock is actually a hard drive for what happened a million years ago, a billion years ago. Everything is compute. Nature is just computing what it sees around it, how it interacts with each other. And if that's part of universal consciousness, it's just interacting with it. So yeah, it just feels like it's all the same thing. And that seems weird, but anybody who's been doing like DMT or whatever tells you the same thing.
Yeah.
And it's like, this is fucking weird. And I've not done DMT, but everybody kind of gets towards this thing. And it's like, maybe the bloody Hindus, 5,000 years ago were right. How do they know this shit? How do they know about consciousness, universal consciousness, theories of self, all of this stuff? It's weird. Anyway, so I've got a whole ChatGPT project section, which is called Universal Consciousness. And I've fed it so much stuff on this, from physicists to historic texts. So,
well, and just to add one more thing on, if you want to pull this chart, like this is interesting, right? The ISM has been actually tracking pretty closely. It's kind of like the late 1980s, right?
Although it was higher then, right?
Yeah, it's above 50, but it still didn't really move until 1987. And what happened in 1985, as we know, is basically the Plaza Accord, right? And now, again, we're not expecting, a Plaza Accord of that. And back here, the dollar fell 50%, right? But here, when you look at what's going on today, right, and the similarities of both the 2017 cycle and then also be it 1985, 1986, 1987, that really set the backdrop for the business cycle to then find its footing and begin to accelerate. So much as we saw in 1987, when the ISM actually started to move above 50 and then went to its late cycle peak around 60, it feels like it's that, it's that kind of setup. And then if we come to, we'll skip inflation, but I mean, look, the V-shaped recovery, continues. And it's like, and you hear people fighting this.
That's such a great chart.
This is great. Yeah, I love this.
And this is part of the pack that we put out on April 7th when we're like, guys, there's a lot of fear in markets. All the sentiment surveys had gone berserk. Speculators were short. Everything was negative. But then when you look at the data, like, okay, this is a V-shaped recovery. Look, in June, we had a V-shaped recovery ongoing. Looks like COVID. In the U.S. regional Fed surveys, looking at the 6-month outlook. And then you're looking at growth surprises versus inflation surprises. Like, does this look stagflationary to you? No, it looks more like Goldilocks to me, to the extent that growth surprises are outpacing inflation surprises. And I think this is what gives us the forward setup, for things like equities. And then there's just way too much fear. I mean, this chart is just a great chart, because when the excess fear gap actually opened up, we were like, guys, this is going to snap back hard. And it's doing that. So I think that, just to sum up everything I've just rambled on for the last, whatever it is, 20 minutes.
You were just throwing charts just to get through as much as you could.
I want to get through all of them. Chart dealer, but it's like, it just kind of feels like we're just going to continue to climb this, wall of worry. And before you know it, it'll be Q1 of next year. And, Bitcoin will be a lot higher. Equities will be a lot higher.
It's just,
equities will do well. All that will do well. That's what
it all comes down to. Don't mid curve it. It's like, if the number go up of liquidity, the number go up of markets. That's it. That's all we need to know, which is lovely.
Yeah. I love it.
You just got to show this chart, Felix, just for the sake of showing.
All right. We'll get some red meat. We'll get some red meat here.
It's just here.
Yeah.
Here it is. It's kind of this, and we're just nowhere near what we would classify as kind of a late cycle peak and stuff like this. So the only thing I'd say is, to some of the more short-term people, watching this, is,
when he says the only thing I'd say, he means I want to show you another 38 charts.
Yeah. No, it's like,
he's an addict.
That's why he's the quant.
It's awful. It's like, we just have to increase our time horizons, and stop getting overly caught up in, the weekly stuff. If, as to Raoul's point of, liquidity explains 90% of the fluctuations in Bitcoin and 95% of the NASDAQ, then that means that there's 10% that goes unexplained. And that unexplained stuff can be anything, and it does matter at times. But really, when you zoom out, if liquidity goes up over time, number goes up.
The current macro environment is a big turning point caused by rising liquidity and a resuming of the global business cycle. In contrast to the strong tightening that ended the crypto bull run in 2021, the current situation is marked by looser financial conditions and a return to growth momentum. Raoul Pal points out that risky assets like crypto have generally gone up the most when the ISM goes above 50 and gets close to 60. He calls this time of strong automatic gains in Habeta markets the banana zone. It is where liquidity, growth, and capital flows all come together. Bitcoin has already gone up more than 600% since its low point in 2022. But Julien says the bigger altcoin wave and bigger institutional transfers are still to come. There are still some similarities with the 2017 cycle, but this time the size, infrastructure, and participation of institutions are much bigger. Pal and Bid say that macro signs are making market cycles easier to predict, and that crypto demand is changing from speculators to a foundational layer for global finance. Pal says that standard finance has a sustained demand for block space, that there will soon be a wave of migration from Web 2 to Web 3. This will make crypto an important part of payments, data, and economic coordination. Stablecoins are growing. To be worth trillions of dollars, and tokenized systems are becoming more popular, this is setting the stage for crypto to become a $100 trillion asset class in the next 6 to 8 years. This isn't just a positive prediction. It's a structural theory based on big-picture trends. It's a spread of technology and the development of the financial system. The current phase of growth may still be in its early stages because of good liquidity and strong institutional alignment.